Welcome to Burlap Teachers. Enjoy the video.
In this video, I will explain how to prepare general ledger journal entries. We'll start by understanding their fundamental role in accounting, which is to record every financial transaction. You'll learn to identify the 5 core account types: assets, liabilities, equity, revenues, and expenses. Remember the basic accounting equation. Assets always equal liabilities plus equity, forming the bedrock of double-entry bookkeeping. Now, let's demystify debits and credits. Debits are recorded on the left side of an account and increase assets and expenses, while decreasing liabilities, equity, and revenues. Conversely, credits are on the right, increasing liabilities, equity, and revenues, and decreasing assets and expenses. The golden rule is that every single journal entry must always have total debits equal to total credits, ensuring balance. Let's walk through an example. Imagine your business pays $1,000 cash for office supplies. First, identify the accounts. Cash, an asset, and office supplies, also an asset. Cash decreases, so we credit it. Office supplies increase, so we debit it. The entry would be a debit to office supplies for $1,000 and a credit to cash for $1,000. To ensure accuracy, always include a clear date and a concise description for every journal entry. This provides a vital audit trail. Furthermore, ensure all entries are supported by source documents, such as invoices or receipts, for verification. Regularly reviewing and reconciling your general ledger helps catch errors early and maintains the integrity of your financial records. This guide makes preparing entries easy.
Thanks for watching. Consider subscribing if this video helped you.